Good turnaround Tuesday, everybody. How are my trading warrior brothers and sisters doing today, the beginning of the Fed meeting? So, I want to ask the crowd here. Hi, Shahab. Who remembers this call down here? Who remembers this call from up here? So, yields have been backing up. I don't think that we've completed yet. Equality would take it up to about 198.2 yield here. I think we're going there, and that's equality. That's not taking into account if we have some type of fib extension of this that, we could even look for higher levels. I mean, if you look at this as a formation all the way down here, call it 145, 45 from here, you're talking 220, 230. Right now, stick with equality. So we'll know the yen rally is over. I'm going to be curious as to where US dollar yen is. That's one of the reasons I've been constructive for a while is because of yields. And, I talked about TLT up here as a failing rally here. So we're right at major support. I'm looking for 132. And down here, I think is going to be a great buy in bonds because I don't think this was a high. And this, I've talked about it here on Face for a while, that this is just, a corrective move. And my amateur Elliottian hat on would be ABC down to here. Maybe this is a wave four, and then we have a blast off. And I think that this will coincide with perhaps the S&P top, at least temporary top from 3050, 3060, wherever people are looking for it. And then we blast to above 148 and perhaps get risk off. And we should have uh, US dollar yen going down once this completes. So maybe US dollar yen has a chance in the meantime to trade. It's really, should be 110 already, in my opinion, with the risk on that we've had. And look at where it's stalling right here at the 200 day. Okay. We get through there. There's some counts right around 1020 or so, but this is getting long in the tooth. So, I'd be careful about risk on over the next week or so. What if Powell, he cuts rates, but then says, the market's going to have to earn more rate cuts. I think that the S&Ps might be disappointed, although I don't think it's done yet. 30, 40. I don't have the lines drawn anymore. I'll look at Steve's. I believe we're back at full strength today. I think comes in around 30, 55, 30, 60. But, we're at new highs, and on the daily, we're diverging, right? We're not at new highs, but there was some pretty good upside mo here on the 1 hour. Look at this reading at, you know, 81. So, to me, it's sideways. I think we have another blast. You want to start looking for the shorter TFs to start peaking under the 70 level to have an idea for top. And I'll wrap it with hi, Monica. My turnaround Tuesday selection is oil. Right here, we pulled back to the breakout. Talked about this breakout last week. It really didn't achieve the count. This could have been it when you look at it. Pretty good rejection from the 50% level right here. So I don't know if we still have 61.8 in it. That would be the count from this formation. But for at least a scalp, I'm trying it down here and think that we could at least get something halfway back. My two targets for my longs at 495 are going to be here for about 50 pips and then maybe a buck. So we'll see if the S&Ps are making new highs up around that level. And the best crude could do is correct the decline from yesterday into today. Uh, that'll be a short. Otherwise, I still think there's a chance that we achieve the 61.8 level here, which would take us to about 58.50. Dollar trying to firm up here again. I'm still negative the dollar and, still looking to sell strength in the dollar. Had a decent little pullback here. I don't have the fibs drawn for the way up here. I would say that I have to stay bearish a dollar unless we start getting closes back over this 98.30 level. So, there could be another 40, 50 points in the Dixie up here, and it could still be a bear market rally in my view. Any questions on anything that I mentioned here today? So yields haven't quite completed. Look for about a 2% handle on the 10-year to know that this rally in yields might be over. Okay, which will probably tie into a high in the US dollar yen and perhaps a low in the gold, which has been moving the opposite to US dollar yen. Higher yields put pressure on gold because it um, creates opportunity cost. So if you could get 2%, that is actually competition for gold, especially after the big rally we've had. So when the bonds bottom, TLT, down there at the 132 level or so, that's when I'd be looking at the long side of gold because that'll be a flight to quality, maybe a little fear in the market, and could get another wave in the gold for at least a trade. Everyone clear and ready for today? We have a great guest today, very popular guy. Saeed is going to be with us at Trader One SZ. Saeed Zaman's going to be with us, and his whole flock of groupies should be filling up the room. I think he's going to make a comment on Bitcoin, and he always covers other instruments, including FX. So last time he was here, he was very accurate about uh, forecasting in advance in US dollar yen. So stick around at the top of the hour. Yeah, I think Gatam 1400's reasonable. Target 1420, 1370. So we'll see. And that's it. Starting to get a little pop in the crude here, trying to turn it on a 4-hour basis. So we'll see what happens. Remember, every trade is just a shot. You have to have good reasons for doing it. The reason for me doing it is the market coming back and checking out a breakout. Should crude start closing back under 54.80, 70, I think that seals it that this bear market rally is over and that we're going to start heading back down towards that major breakout, which happens at 50.50 right here at this green line. You're here for Saeed Banana? And all of his groupies have very strange names. Okay. Okay, Banana Detective. So when you're out there on a case, Banana Detective, you ever slip on a banana peel? Be careful out there. Okay. Blake, how are you today, man?
Hey, good morning,
Good
Coach. How's
morning.
it going?
Good, buddy. Only another 4 days,
Yeah,
Blake, and then next week you get to be uh, not Rumpelstiltskin, Rip Van Winkle.
you know, what I meant to do is I meant to. So my brother-in-law, he puts on a huge Halloween party every year.
Yeah,
It is the props he makes. I mean, he could literally make uh, props from a movie set, right?
yeah.
And it's an adult party. It's not a kids party. So I took pictures last night. Matter of fact, I might be able to show you some of them.
Oh, you had a party
Oh
last night too?
no, it wasn't last night. I'm sorry.
Oh,
It was Saturday night. But
oh, okay.
but I took the kids by to see it because it's so his work is so exceptional. He should really be some sort of prop maker on some horror set. But this is like his big thing. It's like everybody. It's his party. Everybody goes to it.
Yeah.
I mean, he makes these things. I wish I need to. I might have Stelios take over for a few minutes, and I'm going to text you. I'll text myself or text over.
All right, I'll talk to Stel.
Yeah, maybe we should bring Stelios in for a few. I got to show you guys this stuff. It's ridiculous. But we'll bring Stelios here in a second. Anyway, I was there until pretty late last night, and it was past my bedtime by the time I actually had to leave to go home because we had to bring the kids over so the kids could see all this stuff that he's made before he takes it all down because his party was Saturday and he wanted to start breaking it down because it took him 2 months to build everything. And
Oh my goodness.
oh, it's ridiculous. For those of you that have never seen anything, you might have never seen anything like it. It's pretty amazing. But I want to. I'm going to talk to Stelios here in a second because as you can see, the cable got a little
Yeah.
lift this morning. It looks like the UK is going to hold some elections, and Labour had agreed to it. Now, Stelios, are you here?
Hello, I'm here.
Eh,
Good morning.
Good morning. Now, how come Labour agreed to this election? Why?
That's a good question. I think what the way they justified it is that given that we got the extension till January, the no deal Brexit option is no longer a risk, at least not for the next few months. So that's what
Right.
Jeremy Corbyn said. And he said that because of this, then we can move to an election. The problem they've got is that they're polling, I mean, at ridiculous levels. So I was
Right, they're gonna lose the election. So why would they even agree to it? I
well,
mean, that's the question, right?
that's a good question. They were trying to not agree. Basically, they were resisting for quite a long time now. But everybody now has just been piling all the pressure on them, and they're saying, "Look, what do you want? You don't agree to anything. You don't want an election. You don't want this. You don't want." They were kind of forced to agree to the election, and they've said, "Oh, we're going to have the biggest and most amazing turnaround campaign there's ever been in this country." Blah blah blah. But for me, the bottom line is I look at the bookies, and the bookies are always right. And the odds of conservatives winning the election is like 2-1, and the Labour is like 30-1. So that tells you exactly what you need to know. And there's just no way Labour are going to do anything. I think the biggest risk is for somebody like the Brexit Party to actually be higher than Labour. I know it sounds crazy, but that's what I think the risk is. So,
Okay, well, because of that, I'm glad you tried to make sense of it because I couldn't, but that's what created the pop in the cable. So if you're wondering why the pound popped from like 128, to where we're currently at now, the technically, if you look at the pound, we're still flagging, and I've got the flag drawn. Where's my flag stick? I don't know where my flag stick went, but you could look at it kind of like this. Let me get rid of this pink. Look at it kind of like this. I mean, the cable looks strong and it looks bullish, and frankly, a move above like 128.80, 129, that should target the 130 level again. So it looks bullish, and I know I've mentioned this a lot the last couple of days. I wrote it in the analysis. I talked about it on the week ahead video. The pullbacks have been very minor in the pound. I mean, we were above 128 and 127.50 and 127.60 is this 50% retracement of the last leg higher, and the 38% retracement drops to 127. But the fact of the matter is that the cable is holding up pretty well. And if you're bearish to the pound, you've got to have awareness that the pullbacks have been very shallow. So the risk is that we break higher, and so what I'm looking for is break above like this 128.75 level. It's going to really I think going to bring in some usher in some more um cable buying, and it's not just the pound dollar. It's if you look at like the pound yen, I mean, we're flagging in the pound yen too. I mean, this is a here, let me pull up a 4-hour chart, and you can draw it like this. You know, I mean, we have bull flag patterns developing all over the place, and they're just bullish setups, and you can't ignore that. Technically, I mean, we've worked off overbought conditions. We've been consolidating these gains, and that usually sets up for another leg in the predominant direction. In this case, it'd be a bullish direction because we had this very oh, what's the Elliott wave term for it? It was a very I keep asking this because
Impulsive.
impulsive. Thank you. It's very impulsive moves. Very impulsive move higher in the cable, in the pound yen, pound dollar as well. And once again, we're consolidating those gains. So it looks like we could stage a rally. Now, one of the other things that I hate to put you under the gun here, Norway. The Norwegian krona is getting absolutely destroyed this morning.
Yeah, I
I've
hate
I've
it.
yeah, I know you, because you're very bullish on the Norwegian economy, and traders that I follow. For those of you guys that don't know, our firm, not Forex Analytics, the firm that I trade for, which is Gellos Capital, we have subscriptions to different, like, imagine like Forex Analytics types of services for brokers. So we have we pay for Bloomberg services that are specifically made for banks and brokers and traders and independent, and so we pay pretty high subscription costs for a few of these analytical firms that basically cut through a lot of the data, and they're all looking at the euro Norwegian krona, going, man, everybody's scratching their head, but that's where they see the majority of the flows going through, is the euro NOK, and this massive rally that we're seeing here. And I haven't done any work on the euro Norwegian krona in a long time, but you can see just blasting higher. And even you managed to comment in the chat room just a little while ago to give me a good reason why the euro Norwegian krona is going higher. I don't think anybody's got one. No one.
Yeah. Plus you get paid to have the short, but because of carry. But still, it's I think it goes probably back to what you said some time ago. The euro is a funding currency, and it could be. It's actually, no, that's wrong as well, because it's really Norway that's weak. It's not the euro that's strong. So I don't know. I give up. I really don't know.
Yeah, and the euro NOK, it's just blasting higher now. Frankly, and I'll say this to you. I am looking to short the euro Norwegian krona, but I'm actually waiting for the 127% extension that comes up here. Now that 127% extension is, let me just reset this. It's of the I have to reset these charts. There we go. Of the major move lower from December 2015 to the lows that were set in 2018, 127% extension comes in at 938. But I don't know if we're going to reach for it. But I want to be there just in case it does. I mean, because we are now having, and what Coach would call, could be a potential throwover, where you come outside of a channel and you reach for some resistance here, and then reverse back into the channel. And that would be a throwover. What I'd look for, I don't know if we're going to get it. I don't, the 930 level could have stopped it today. It could have. I mean, a lot of these round numbers, these big figure numbers like 930, for example, could be what drives it back down, and it may be the case. I personally am still waiting, but I might not get what I'm looking for. So, and that happens. I try to plan my trades and then trade my plan. That's what I attempt to do, and I'm not going to just start chasing it all over the place. But anyway,
we don't always get what we want, but we get what we need. Rolling Stones.
I don't know if I get what I need all the time. No, I don't know. Anyway,
okay, well then, if you can't be with the one you love the one you're with.
Okay.
How about that one?
So
I practice that.
Yeah, you're good. You're good. Let's talk a little bit now. I'm actually going to try to go through the majors and go do our bias chart before we have Saeed come on today as your guest.
Where is that Volgi?
He is still. He had to take one more day. They had some business they had to attend to.
Oh,
some
he-
real estate business they had to attend to. So for his wife. So
lifestyles of the rich and famous he's living lately.
yeah, I guess
What,
it's
huh?
one of those. It's one of those. I have to stay on vacation for an extra day because I had to check the sand coarseness.
Well, you and Stell are good partners.
Yeah. So anyway, but Stelios, one of the other things that we've noticed is obviously we have equity markets at all time highs, and we're pushing up towards resistance. I sent out a tweet yesterday about the dollar yen and the strength of the dollar yen, and Coach made a great observation today, and I don't want to take away from it because he said, based on what the S&P has been doing, it's hard to believe that the dollar yen isn't at 110 by now at least, and I agree. Why aren't we higher? And the thing about the dollar yen, as you guys probably know, is we're knocking our head up against the 200-day moving average that comes up just at the 109 level, but also we have a big inverted head and shoulder pattern. So if we do break out, it's it will be bullish. And you could draw the argument that perhaps the dollar yen and the yen pairs, because if you look at the yen pairs, you got you got the euro yen that's bull flagging, you got the pound yen that's bull flagging, you got the Aussie yen that's already breaking higher, you got the New Zealand yen that's it's kind of lagging, I guess. The Canadian yen continues to rip higher, but you got all these yen pairs that are making their moves higher. You could argue that they're going to catch up. And before I make my point here, because I do have a point, Stelios, what do you make of this rally in the S&Ps right now?
That's a very good question. I was talking about it with a friend of mine yesterday. We have to remember one thing: who has been the biggest buyer of equities over the past few years? And I mean, you want to guess? Actually,
Bank
we,
of
we
Japan?
well, central banks, but also buybacks, right?
Buybacks.
Corporate buybacks. So the
Right.
corporates have been buying their own stock at ridiculous and unprecedented levels. And from what I remember, I think this year is due to be the biggest year in terms of buybacks ever. And we said in the chat room, and I think here on Face as well, a few weeks ago, or a couple of weeks ago, that look, there's a blackout period for buybacks, which is going. And I think it started, it ended last week or something like that. So corporates are back in buying the stock at ridiculous levels. Excuse me. We have yields which are trying to rally, but they can't. Every time they rally, and every time 10-year US yield goes up, it just gets slammed down. The Fed is still cutting rates. The whole situation is still quite bullish for stocks, but not because the economy is doing well. And this is the situation we've had for years now. So what do I think as a big picture? It kind of makes sense that we're rallying now because, as I said before, corporates have started buying back their stock again, and I think these all-time highs. We'll be saying it in these webinars as well. I think we're going to have one more. I was saying this. I think we're going to have one more big push, all-time highs, probably something like 3,200 on the S&P. I don't know how far it's going to go, but that, in my opinion, will be it, at least for this leg. So that's my view for now.
And that's it's an interesting view, and that would coincide with some sort of blow off top. Everybody's trying to fade this the big megaphone pattern in the market. You can see it's I'll show you guys big megaphone pattern in the S&P. Everybody's trying to fade it, but the fact of the matter is the market's pricing in a China US trade deal, a possible Brexit deal, a USMCA, and I think it's really priced into the market, but that doesn't mean that we can't spike higher as we complete these different agreements around the globe. And that's I mean, whether you're talking about Brexit or USMCA, which are probably going to be the based on what we've seen, probably before a China-U.S. trade deal is completely inked out. But regardless, I mean, that could spike us up into new highs and continue to take the market higher.
Could I add one thing on?
Yeah, please do.
On Stelios's comments about buybacks, Stel. A lot of it is being financed by debt.
Oh,
Corporate
yes.
debt is a lot of people said, well, the last crisis fueled by CDOs, housing. This time, a lot of the bears are pointing towards corporate debt, which is records because it's been cheap to borrow for so long, and they're using a lot of that capital for financial engineering and stock buyback. So it's almost like they're not just buying their stock, they're buying it on margin. So if the trend ever shifted and their stock price begins to go down, they're getting hurt. They have to pay back the loan and they're getting hurt on the price. So just another point
Yeah.
that a lot of it's fueled by debt.
Yeah, I agree, and I think that is going to be the big problem that we're going to face in the next few years. How long will it take for us to get there? I don't know, but we have, like you said, corporate debt, student debt, auto loans, all that stuff. It's it's gone to levels, unprecedented levels, right, in terms of absolute, percent of GDP or percent of whatever you measure it against. So, my view is we're probably going to see government bonds. Dropping, so yields rising at some point, and then everything's going to be like a snowball effect. So I think you're absolutely right in what you said. It's going to be a very tough situation when that happens.
Corporate debt.
One last one, and those are great points, Coach and Stelios. And the one last thing I want to bring up is, we're talking about the dollar yen, and we're talking about how it's knocking its head up against the 200-day moving average. One of the pieces of data that we got last night is the DSI numbers, and the DSI numbers are for the Nikkei came in at 91, and if you look at the Nikkei right now, we're stretching higher, and that means it's overweight bullish sentiment is basically what it is. And we just hit 161% extension of this move right here. If you take another fib here.
Yeah.
There we
Interesting,
go.
Blake.
We
That
have a
could
little
be the
161%. Yeah, the big short. Hey, look at that. And then but the 78% retracement comes in a little higher. The Nikkei could stretch a little further, possibly, but I would think that up here, you get some sort of reversal. Now, that is to coincide with the dollar yen. That means that which the Nikkei and the dollar yen, by the way, they're very, very strongly correlated. If you guys have never looked at the charts, they're really, really, they go hand in hand. So, if we do end up topping here in the Nikkei over the next couple of days, maybe the dollar yen's upside is limited. The one point I wanted to make with yesterday's tweet, because I'm really, what I'm really hoping for in the S&P is what Stelio said, is we get some sort of blow off top in the market and we just blow past a lot of this resistance and break higher and then reverse. That's been my overall hope in recent, actually, probably over the last year. I just, I've been waiting for some sort of capitulation type of move to the upside, which would be a blow off top, and I would hope that happens, because that really marks a high for us as traders. So maybe we get some sort of type of move like that in the S&P, and maybe these yen pairs continue to rally. The point I was trying to make, because I don't really care, I'm not shorting stocks up here, because I'd like to see it. I'd like to see the whites of their eyes before I shoot, if you will. So, I'd like to see the stock market really, surge like 6-7% intraday higher. That would, and then reverse. That would be a really, strong indication for me that I need to actually reverse course as far as risk goes. But what the point I'm trying to make here is, if the dollar yen is ripping past 109, you don't want to stand in the way of the stock market. So in other words, if the dollar yen, is starts to blast higher, which it could play some catch up, guys. And that's the one thing you got to realize is people could turn around instantaneously and go, you know what, I'm very underweight stocks or underweight yen pairs or overweight yen. I need to get out of it. And then you have the dollar yen surge towards 110. Yeah, the last place I'd want to be is if the dollar yen blasts higher, is I the last place I'd want to be is short equities, because that would probably mean equities are, making their move higher as well. So those are just things that, I wanted to be able to explain to you guys on the reason why I tweeted that yesterday. And I got a lot of traction. And then you get a lot of the, you get so many trolls out there, especially when you talk about, being a bull up here. It's like, I'm not bullish. I'm just trying to give you guys a warning that, don't, don't be, silly and get in front of a freight train if it starts moving.
The masses are asses.
Yeah, well, it's just one of those things. It's like, everybody's, especially with stocks up at current levels, everybody's got an opinion, and if you're on the wrong side of, a lot of people's opinions, you're going to get a lot of,
Yeah.
comments, and it's like,
Yeah.
whatever. I'm not.
I
I
know.
don't care. I don't even read into it, and I don't even read most of them. It's just, some I read yesterday. I'm just
Ridiculous. People sit back and they root for you to be wrong, so they feel better about their inadequacies.
I guess so.
I don't know.
I guess so.
Ha
But
ha ha! Pinkert was wrong. I'm smarter than him. Who
But
cares?
the thing is I'm not, and it's funny because I'm not even really bullish or bearish risk here. I'm just kind of watching, what happens. What I'd like to do with you guys, really quick, and Stelios, unless you got anything else that you wanted to talk about before I start, I'm going to take the next 30 minutes. I'm going to build you guys a bias chart really quick, so you guys know what I do every day, as far as support and resistance levels go, and find these levels. But Stelios, do you have any other comments for us?
I don't actually. Just one last thing I want to mention
Yep.
about the UK, which is basically, where does this a new development about elections in December leave us? And the quick answer is, we have two fronts now. We have one front, which is the Conservatives and the Brexit Party, who want Brexit. Obviously, the Brexit Party is a bit more radical in terms of they want to get out, no deal, and screw the EU and all that. But so you have that on one side, and then you have the Labour and the Liberal Democrats who have said, look, we do not want a Brexit. They said, we want to remain the EU. We're going to be strong in the EU, blah, blah, blah. So you have these two fronts, and it looks like it's a pretty clear majority for the Brexit people so far, but obviously things can change in a month and a half. So the next vote is essentially going to be another, a proxy Brexit referendum, right? Because you have
That's what I was just going to say, that it's basically a referendum.
Yeah. So that's another opportunity for the people to, cast their vote essentially on the European Union. So this is going to be very interesting to see, and the way it builds up. But
and it's interesting because when I talked to, I was actually on a plane to Connecticut, to New York to last month, and I was sitting next to a Scottish lady, and her and her husband were like traveling the U.S., and they like caught an early flight, so she got stuck in the middle seat, and so I ended up chatting with her, and I'm like, I asked her opinion about Brexit, and she's like, I didn't even know what I was voting for. Now you think about that.
wow.
She was like, and she works in the hospital, and she's she's like an administrative manager in a hospital, and smart lady, but she really the Brexit thing was very confusing to her, and she didn't understand what she was voting for. But I think that may be true with a lot of UK citizens several years ago. And so now with this general election, knowing that Brexit hinges on whether Labor's in or not, or the Tories are in or not, I mean, maybe this is viewed as a second referendum. I think that's a great point, Stelios.
Yeah, it could be, and it shows you, right? I mean, even educated people who are supposed to understand what the whole thing is about, they still don't get it as much. But anyway,
Right.
That's interesting. Very interesting.
Yeah, interesting, right? Yeah. So, but I tell you, she had a few things to say about Boris Johnson. That was for sure. I just sat there and listened to it.
The problem is that you have Jeremy Corbyn on the other side, who really is not popular with anybody at the moment. That's the problem that Labour have. If there was anybody else like Miliband, who was before, or anybody else, I think they would have a really good chance. But Corbyn, man, I think he has no chance.
Well, we'll see. Well, I guess we'll see. And I'm not the sharpest tool in the shed on UK politics, but it's an interesting situation as it seems. So, let me go ahead and get through some of these charts, and I'm gonna talk about the euro. So the euro broke this uptrend line with that we've all been. I know I've been monitoring all week, and it did it in European trade. We might end up getting a false breakdown, but what we've got here is we've got a nice little double bottom now. A double bottom really isn't a double bottom until you take out some sort of neckline, which would, in this case, would be over here. So you'd have to take out 111.10 basically, and then that would, give us a move back up towards 111.40, 111.50. And also keep in mind that later on this week, there's huge euro expiries around 111.50. So huge ones too, and we're trading obviously sub 111. Just the spot price tends to gravitate towards these big option expiration levels. So just keep that in mind. Anyway, right now, support I'm just going to write down as 110.70, and below that you have a 38% retracement at 110.65. So those are all really key levels of support. But right now it's 110. I'm just going to write 110.70 because it's approximation. Support and resistance is not an exact science. I try to explain that to people that if it was, we'd all be gazillionaires, but every algorithm's programmed to know exactly where where you're looking at as far as support and resistance goes. So you kind of have to use this as a zone. This is an approximation around this level. Resistance is around 111.10. And I think if we do break above that, we would have the uh, potential of making a move back towards 111.50. But for right now, I'm going to put we are in a range. And the reason why I'm going to do that is because we snapped this uptrend line. And I think we are back below the descending wedge trend line. Now, that's not the case for the dollar index, which I'll talk about here in a minute. But as far as the euro dollar goes, the euro is underperforming versus what the dollar has been doing. So even though I'm bullish the euro and I've got a euro long and my cost average is like 111, it's like I would say right now 111 in the mid 20s because my cost average resets every day. That's one of the things when you trade institutionally. I don't have a cost average that's like yours that you might be running some, a trade that you took. I have to reset. I go back to zero every day. So I have to, reset my cost averages. So my cost average is right around 111.20s currently based on my position size. But that's the way I'm looking. I'm still holding on to my position, and I like the fact that the pound actually looks a little bit bullish here. So looking at the cable, key resistance right now comes in at 128.75, and I think a break above there would be a very bullish event for the cable. 128.75, that's going to be key because that is the flag resistance. Okay. And I do think that the cable is bullish. And the reason why I say that is because, as I talked about just a little while ago, these pullbacks have been very shallow. As you can see, we're pulling back right to the previous resistance zone that's acting as support. The dips, down below 128 are being bought. I still think that any move towards this 127.65 level is going to be very well supported. I'm going to write down 127.75 is being, pretty key support right now, and I think it's bullish while we're above it. So, and really we need to get back above 128.75, 129 for us to have this flag pattern start to play out. And with the news that has come out overnight, you have to think that, with a possible election now coming and, a hard Brexit seems to be off the table, there's not a lot of reasons to be bearish the cable at this point unless you start to see a shift in the polling. If Labor looks like it's coming into favor, then maybe we might see a shift, downward shift in the cable. But for right now, I would be very careful about being bearish the pound while we're trading above this support level. All right, let's go over to the Aussie. Aussie looks, we have a bull flag pattern here in the Aussie, and that's undeniable, and we're breaking higher now. The one thing that the reason why I'm not going to give the Aussie a bullish designation right now is because we are making lower highs. Okay, so that's a fact. You can argue and say this is more or less a big range, right? And until we start making higher highs and break this high, I have to keep it more of a range bias. But I sure as heck wouldn't want to be short it right now. If we got up towards the range highs here and it looked like it was going to fail, maybe that's a better place to be on the short side. But I right now doesn't make any sense to me. Aussie's actually looking pretty bullish at this point. Yes, we are attacking. We're nearing the top of the range, and we're probably nearing some decent trend line resistance. But the formation inside of this range looks pretty bullish. So for right now, support is going to be intraday at 68. Let's just call it 68.35 roughly. And resistance, which I think is going to be key, is going to be back up here at 68.80, roughly 85. I'll put it 68.85. I do think it's in a range, but it's threatening to go bullish. Let's just call it like that. Okay. Let's take a look at the Kiwi. Now the Kiwi doesn't look so hot. This looks more like a range. Now we are obviously, struggling, and you can see it in the Aussie New Zealand. The Aussie New Zealand looks very bullish. And actually, if you look at the Aussie New Zealand, we're breaking all sorts of resistance here. You can see it looks nice pennant formation. We're breaking out higher, so that's why the Aussie is actually looking a little bit better than the Kiwi. And I'm not convinced about the Kiwi unless, like the Aussie, we start making higher highs. Now the 64.20 level is such a big level for the Kiwi because this is the breakdown point right here. All right, and even though we've had minor spikes above that resistance, that is just really key resistance moving forward. Now, I don't think we're even going to get close to that today. Intraday, we probably, our focus should be somewhere down here. Okay, which would be like, let's call it 63.15, which is the 618 retracement. All right, 63.15, since it is already trading heavy. And then resistance, be right about here, 63.85 roughly. 63.85, and we're in a range. Okay. All right, let's talk about the Canadian. Now the Canadian took a nosedive out of nowhere. It just started like rolling over, and I got a question in the chat room. Oh my God, why is the Aussie or the Canadian so heavy? Well, the Canadian's so heavy because frankly we're below a big weekly trend line from 2012, and we're consolidating below it. So I think, and I mentioned this yesterday, and I'm going to say it again. While we're below 131, I don't think there's any reason to be long the dollar Canadian. While we're below here, there's really no reason. And it's like the bottom just dropped out of it this morning, and you got to expect that while we're trading down here. Now, yes, we are oversold. The daily RSI is oversold. Yes, we're approaching some support. Yes, I'd be a little nervous about shorting the dollar Canadian down here. I have no Canadian exposure, but I have to be convinced that we're reversing just because, and I try to explain this to people all the time, just because I don't want to short the dollar Canadian doesn't mean that it's automatically a good long. All right. Just because, I have the opinion of, a currency is too strong, so I don't want to short it, but it's too overbought that I don't want to buy it. Or in this case, it's too oversold, I don't want to short it. Okay. But it's also too weak, I don't want to buy it. So, I don't have, if you had to put a gun to my head, I would say, I'm just going to short the dollar Canadian. There's no reason for me to be long. But at the flip side of that is it's pretty oversold. I don't necessarily want to chase it down here. I do think that we're going to have support down at 130.15. I think that's probably pretty key. And then we also have 130 just below that. So 130 is a round number and also a 161% extension, but 131.15 is also support. Okay. Resistance, I'm just going to write down roughly 131, and it is bearish. no doubt. Take a look at the Swissy. The Swissy's been pretty challenging. I really have been wanting to short this thing. I have not. I think I shorted a couple of weeks ago, and I just got whipped around in it, and just said, forget it. And I missed this breakdown of this channel. We are knocking our head up against this downtrend line, and it's also against the 618 retracement. You can see the spikes intraday. They're not holding, they're not sustaining. So right now I'm going to write down 99.70 as being resistance. And we're in a range here. Support, I would say is probably right here. And there's I don't see any reason for me to be trading the Swissy at this point. Like I said, I want to short it because if there's some risk aversion, I want to, have Swiss exposure, but there's no risk aversion right now, and I have no reason to be long Swiss francs, and I don't want to be long Swiss francs when you have massive rollover costs. So there's no reason for me to be doing that right now. 99.30 is support, and we are in a range. Okay. Let's go over to the dollar yen. As I've explained to you guys in the dollar yen, so we're up against the 200-day moving average, and that comes in at 109.06 is what I've had marked up the last few days, actually since like last week. But I'll just write down 1905. That's key. It's the 200-day moving average, but we also have a big inverted head and shoulder pattern. So if the dollar yen really starts to break higher, you guys got to be real careful about it, because we could play some catch up to equities. Now, while we're above 108.30, I don't think there's any reason to be bearish, but you can see this support comes right through here. And 108.50 was a big battleground last week, and I still think it is. So roughly 108.35 is, as long as we're above that, there's no reason to be bearish. Do you get bullish here? It's hard to be bearish, but I don't necessarily want to be bullish yet until I see it break out. So I'm going to mark it as a range for now, but we would threaten to go bullish here if it started to break higher. What's next? Dollar index. Okay, so the dollar index, like I said, this is a little bit different than the euro. We do have the bear flag that's still playing out now. Also, I want to talk about a couple of things here regarding the dollar index. Okay, so here's your dollar index. We came out of an ascending wedge, so you can see it here on the daily chart. We came out of an ascending wedge, and that's this blue line. We're basically holding right at the underside of the trend line of the ascending wedge. Okay, we're just holding it. And if you look at an intraday pattern, we have a bear flag pattern. Now, whether you have the flag stick drawn like this or whether you have it drawn like that or like that, it doesn't really matter. All I can tell you is we're holding the flag, upper end of the flag pattern. The dollar tried to break higher, gave us a little false breakout, and we're moving lower again. Intraday, I would say support is probably right around here. Okay, which would be 97.63, but really big support is going to be at 97.50. So I'm going to write down 97.50 because it's not a whole lot of reason to be trading the index necessarily. But I think it's important to note where things are, because this could alter what you're seeing in the euro and the cable quite substantially. Now, a rally up to the 98 level, we could even get there today. We could make a brief new high and still be within the parameters of the flag at 98. So that's why I'm going to write down 98. But really 98.09 is the 38% retracement. You can see it there, but I'm going to write down 98 for now. And the dollar index is bearish. Okay, versus like the euro that's kind of neutral, the dollar index is still bearish. And I think while we're still contained within this bear flag pattern, you got to take it as a bearish setup for now. Okay, and Coach said a little bit earlier, hey, I'm looking to fade it. Well, he was looking at maybe 98.30. We could make it all the way up there, I think, but 98.30 is a 50% retracement of this entire move lower. Now, if you look at it from this this high, we actually did hit the 38% retracement. If you look at from this high, we actually hit the 50% retracement. So you could say there's a confluence of fibs at, these highs that we just hit. Something else to
Nice.
note. Yeah, I mean, it's just,
You know, a lot
oh,
of people don't think like that. They do it just from the high. So that's
ye-
interesting, that you could do it from different waves and see if they all come together.
well,
I,
that's,
I like that.
that's what we call a Fibonacci confluence or a
Yeah.
cluster. And I do that a lot. I cluster a lot of, because if I find a multiple, clustering of fibs at certain
Yeah.
levels, that gives me that,
It's a great
that
lesson.
edge. So yeah. So anyway, there's the dollar index, and let's go into, so the peso. I had an order. I'm a little tweaked about this right now. I had an order to sell the dollar Mexican peso at 19.1550, and I didn't get hit. And then all of a sudden, the snot got knocked out of it this morning. I had an order overnight. It never got filled, and the reason why I wanted to short it is because the peso is very similar to the Canadian. Is it's in breakdown territory as far as I'm concerned. We're in a little down channel. You can see it. It's kind of looks like that, something like that. I had it drawn up like this overnight. Anyway, and I was looking for a move to the underside of this trend line, and I was just going to get short and put a stop above 1922. I didn't get triggered. I missed it by 100 pips on the dollar mex, which is irritating because, like I said, the bottom just fell out of it, and I'm like, of course I'm not in it. But what I am going to note is that in the dollar Mexican peso, you have to realize that we're more or less consolidating outside of this, big massive triangle. We broke down late last week, and now we're consolidating below the triangle support, and that it's bearish. And until we get back above 1920, I don't think there's any reason to be bullish. So 1920, I want to put an asterisk there, and I'm going to write that down. It's bearish, and then frankly, if we break below 19, this is 161% extension of this move. We break below 19. It could, you could start to see some pretty big selling. JP Morgan over the weekend, they wrote in a big piece about they're very bullish emerging market currencies, and specifically the peso. And look, if equities continue to strengthen, carry traders are going to take advantage of the peso, and they're going to be buying pesos. So as long as equities don't, go tits up and implode, then, the dollar Mexican peso is probably a good short. Should the stock market come off, then you're going to see the Mexican peso reverse. So anyway, let's talk about the Swedish krona. Swedish krona, I haven't traded it a lot recently, and it's just been kind of contained to an uptrend. Pullbacks have been fairly minor. You can see how we've pulled back to this support at 960. We made a false breakdown, a couple like late last week, and then we moved back up. So I think this 960 level is still really key. It's a 50% retracement. And I have to say that you look at these Nordic currencies and they're still bearish, meaning the dollar is still bullish against these Nordic currencies. Not, and you have to keep in mind that these are some pretty strong trends, whether you're talking about the Swedish krona or the Norwegian krona, which we'll talk about here in a minute. Very, very strong. So if you want to see where the dollar is really, shining, it's right here. Now, I do think the U.S. dollar Swedish krona is going to find some resistance intraday. And we could probably do this. $50 retracement. Some previous support comes in around 976, but it's just very minor. Oops. Let's see. 976. Just minor resistance. Then let's go over to the U.S. dollar Norwegian krona. Now, we had a little bit of a discussion about the NOK. I don't know if 930 is going to cap it. I personally, I was looking for a move up towards the 127% extension of. You can see it right here. 127% extension of this move would take us up to 938. That's what I was hoping for. I have an order out there trying to short it up at those levels. I just don't know if that's going to be the case. It's really coming off now. Intraday, let's just write 930 intraday as being resistance, but I think there is still the scope for it to continue to move higher. But it's bullish for now. And support will be, this is the channel resistance. You can see we were knocking our head up against it. So I'm going to say right now that support is at 922.50. While we're above that, it's bullish, but we could get that what Dale likes to call the throw over, where you get a breakout above in this case, like a breakout above channel resistance, and then a reversal back into the channel would be a throw over, or a false breakout is another way to look at it. So here's your bias chart. This is something that I try to do on a daily basis. We have Paul Franco, who is on the Forex Analytics team. He does this during the European crossover every single morning for all of our Forex Analytics subscribers. So, it's a great method or a great process of understanding where your key levels are at and what your bias should be in that particular pair. And sometimes you have a mixed bag. Like right now we have a bit of a mixed bag where if it was completely dollar bullish or bearish, you'd have the euro in a bullish trend, the Aussie in a bullish trend, the Kiwi in a bullish trend, Swissy in a bearish trend, vice versa, but I'm just trying to explain to you guys that this helps you really understand if you got more of a mixed bag or a strong bias one direction or another. And it's something that I've been doing since I used to do it called like a T chart back in the day, but I've been doing this since 1997. Even when I was trading equities back then, I would go, oh wow, I want to target the semiconductor stocks, and I do a T chart. Okay, which are my bullish semiconductor stocks? Oh, I want to buy some Intel. I want to buy some Maxim. I'll buy some Applied Material, but I don't want to buy, some other stock, some other semiconductor stock, because it's underperforming. So I put that on a bearish side. So I've been doing a iteration of this bias chart or a T chart for as long as I've been trading, and it's a good process to go through for traders, in my opinion. So I did that one for you. You guys can do it on your own from here on out, or better yet, listen to Paul Franco on a European crossover and get it done. You can do it with them every single morning if you're a Forex Analytics subscriber. Speaking of which, if you guys haven't tried Forex Analytics, okay. Forex Analytics. Let me go over to our pricing. This is our analytical tool. The Face webinar is a free webinar that we give, but we do also have webinars that are specifically for clients. And you can see we have premium and light versions. The premium version has all of our different types of analysis, whether you're talking about harmonic, Elliott wave, we have our patterns in play, or what we see is setups by the book. In the market, and everything that you see here is via mobile app. You can put it on your iPad, you can have it on your desktop. You get notified when support or resistance levels get broken, bull bear lines get broken. You get a new analysis that is updated, like this morning or 14 hours ago. The last euro update was out, but 2 hours ago you got a pound update on the bull flag pattern. When those updates come out, you get notified via your mobile device. And also we have a lot of other tools, whether you're talking about a calendar, update history, Twitter, integrated Twitter, where you can customize this. We have our the data flash that gives you live data as it's being released. We have no upcoming data. Oh, here we do. Actually, consumer confidence is coming up in a bit, and that's all audio as well. And on top of that, you have our chat room that is exclusive to our premium members. And you guys are going to be on Jumbotron, so you guys can say hello. Right now, I think we have 90 people in there, and we're chatting all day long, every day. And Hey, that's actually pretty cool, Nitish. That's awesome. And you can see Stelios is on Jumbotron, so is Benedict. And anyway, for those of you that want to know where I'm at all day, and Stelios and Paul Franco and Amanda, she's actually with her daughter right now, but we're Steve is in here all day. We're in this chat all day long. So if you guys want to have some good company, that's where we're at. So try us out, and if you're trying out the light version, because cost is an issue, and you want to just have like the lighter version at $19 a month, this one right here, the light version, you don't get the chat room, but at least you can try it out for the next 10 days because when you try out Forex Analytics, you get the premium version for the next 10 days. So give it a whirl, see if you like it. And then also one last thing before I turn it over to you, Coach, is if you guys are looking for a broker, our webinar sponsor is Forest Park FX. You can see them right here. They are our webinar sponsor. They're, in my opinion, the best in the business for finding you a broker best suited for your trading style. So, and then if you want to be part of Forex Analytics, you can be part of the reimbursement program. If you're not in the United States, so you're in Europe or Asia or somewhere else in Australia or something, you can actually be part of the reimbursement program. You might actually get Forex Analytics for free. So just you can contact them via Skype or email right here. Okay. And if you're in the US, you could qualify for cashback rebates. So, so anyway, that's my spiel. I'm gonna leave it to you guys, and I want to thank you all for spending time with me. And Stelios, thank you for all your comments. Coach, always thank you for your comments. And there's your bias chart. And have a great interview with Saeed.
Okay, one of our favorites.
Hey, have a great interview, and it's always good to hear his insights. So,
thank you, Blake.
All right, thanks, guys. Have a great one.
Take a snapshot of this bias chart before I go to Saeed. 1, 2, 3. Take the picture. Okay. Okay, Saeed. Welcome back, my trading warrior brother. How are you?
I'm good. Can you hear me?
Can hear you fine, buddy.
Okay. What chart can you see? Because
looks like a Euro Swiss 15-minute.
yeah. I'm trying to get it so I can see this because I don't know what I'm showing right now. I so prefer the GoToMeeting one, but yeah. Okay. Yeah. So as long as you can see my screen, that's all that matters.
Okay, yeah, and the chart up there is Euro Swiss. So
okay. So is there any way you'd like me to begin?
Excuse me?
Is there any pair you'd like me to begin with?
No, I'm just curious what you have on your radar. I mean, it's a red event week. Maybe you tread lightly with the Fed tomorrow, NFP Friday. I want to acknowledge that you made it's not the first one, but you made a great call on the yen last time you were with us. I'm surprised the yen's not 110 already, Saeed, with the brisk on that we've had in S&Ps.
Yeah.
Where are you at on U.S. dollar yen?
So I'm heading much higher. I believe the yearly open next. So so I'm still bullish this pair, and I'm looking at it from like a macro perspective. I think if we could do a breakout, we could. I know it probably goes against most what people say, 120s, but I'll explain my reasoning why behind it as well. Okay. So next short-term target, I believe 109.30s, which is if I go to the 4-hour, which is just this high here.
Yeah, that's what you had last time too, and I kept in mind your 109.20 was a great number before we got a pretty good break.
Yeah, I've been quite fortunate with this pair. I've been milking this, but yeah. But if we get above the yearly open, this is going to be massive upside.
Where's that? 109.5, buddy? 109.60?
68, yeah, around 109.68ish. Yeah. So if we look at the yearly chart, I mean, I'm seeing this as a pullback before the next leg up. So if I go, for example, like a quarterly view, a yearly view, right? I'm seeing this. I'm seeing something like this. So that's like a deviation. It's hit here already. So if we close bullish, that's the down move done. And then we get the impulsive move up. So if we look at like previous years, small body, small body, small body, it's more of a, like a corrective behavior of the market, especially with indices, at all-time highs, and everybody's trying to short the indices. There's no sign of shorting. I mean, I don't see a short anyway. So if this breaks up, this could be huge. But what also supports this is looking at all the other yen pairs. You look at all the yen pairs; they're at major, like yearly, quarterly support levels bouncing off. So
Okay.
I mean, bigger picture, right? I mean, if we look at this, I mean, I don't use basic chart patterns, but just to see, illustrate the point. If we break above this, and this is a quarterly breakout, this could be huge. This could be like, around here, 1018, 1020s. I personally think we're going to get that. But one
Well,
level
then we're going to have sharply higher yields.
well, whatever is going to happen is going to happen. But if you look at
Yeah.
the bigger picture, I mean, and I'm not just looking at dollar yen on its own. I'm looking at gold. I'm looking at all the other yen pairs together as well. So that sort of confluence.
Would that be bearish gold in your mind? If we had a big breakout in yen and we're heading up to 120, would that be a bearish environment for precious metals? Because that would mean higher rates and more opportunity costs for gold.
You know what? I'm not gonna lie. When it comes to fundamentals, I ain't got a clue. I just gotta. I go.
Okay.
I rely on others to tell. Their
Okay.
views.
It's just a
But
correlation. That's all.
yeah.
Just
So
a key correlation.
for example's sake, I mean, for me to take this, I've been looking at the ZN and I've been looking at this for my gold ideas. And if I overlay this with each other, I mean,
Yeah.
last week I got squeezed on gold. I'm looking at weekly, no wonder. I got squeezed on gold, but the ZN was pointing lower. So I accepted the loss there. But then this week, if you look at it snap back down. So I think gold comes to 1450s, and then I'll make my mind up from there.
Okay.
But yeah, going back to the dollar, I mean, this week I don't have a very clear view on the dollar yen. My main thing for the dollar yen was a break above this low here. So I've been using like a macro range for this, coupled with the quarterly charts, which is this is the thick green line at the bottom of the range low, the thick green line at the top is the range high. So the moment we made a weekly close above that, look historically, we've got deviation. As soon as it gets back above, pushes all the way back up. Deviation, back up. Deviation, back up. Now this is supported with all the other yen pairs as well. I believe we call around the 111.24s, which is the view we had last time as well. So this range level here lines up with the yearly open. Now, because it's end of the month, I'm a bit, I don't really like to take, swing positions ahead of month end, unless it's a wider stop. So I'm unsure how to get on board at the moment. I've got a small position in, but ideally, as long as we don't make a weekly close below here, I'm bullish. Now, people have a problem like, oh, it's going, how do I get on board? Well, in this case, I've got a strong conviction. I'm happy, and if I got a higher target, I'm happy to add a small position with a wide stop. Now, somebody say, wow, that's 86 pip stop. But think about it. The moment I get a new invalidation level, say, as soon as we make a clean break above this level here and hold, my invalidation level shifts. So whatever I've reduced it by, I add. So that's one approach I use. The moment I get a new invalidation level, I'll add whatever I've reduced it by. So that slowly builds up your position without having that FOMO of missing out. Now, it's not for everybody, but I mean, it's smaller accounts, people.
And then your line in the sand trails up with it as it attains a new level to the upside. Is that what you're saying?
That's it. So the reason why is another reason way is by looking at it is, I mean, if we're approaching the end of the month, right? What is the usual behavior of a candlestick close? It's going to usually leave some sort of wick in, isn't it? So probability wise, a breakout or a trending move right at the end is a high probability. We usually have an impulse, big if it's a big bullish month, for example here, and then end of the month it wicks down, forms the wick. So what I'll be looking for is once the new month starts, let it do its wick. As soon as it wicks and gets back above the open, and on the lower time frames, it gets back above my key pivots, then I'll know the low the month is in. And then what I'll do is I'll look to ride the body, the expansion phase of the candle. So I'm probably waiting till the end of the month. So usually what I do is when it's the end of the month, I start moving away from the majors. Now, reason why is because when I was going into the week, right, I had a very bearish bias on the Euro USD. So I'll break down Euro USD and it'll make sense for why I choose to go with the crosses. So if I go with Euro USD right now, if we look, we're in this range. So this is the range low, that's the range high, and we come to the midpoint. Okay.
Yeah.
I'm actually macro bearish Euro USD unless we smash above this level here. So for me, it's just coming to resistance. Now that gives me a bearish bias. Now that's a bias. That doesn't give me a trigger. So I'm looking at this week. I'm seeing, okay, Aussie dollar's bullish, dollar CAD's bearish, but Euro USD is looking bearish. So I'm getting mixed signals. If that's the case, I move straight over to the crosses. So to start the week, I had a bearish Euro USD view, and then I left it alone. I went straight to the Euro Aussie. Now I like to use Euro Aussie as an example as to how I approach things. I think it's a good example of where if it's I remove the dollar risk in that case, and
Yeah, so the dollar's unclear and you move to different crosses that don't involve the dollar.
that's it. So
Makes sense, man.
So it's
Good luck.
just personal thing for me there, and I think Euro Aussie on its own merit is really clear. So I'm looking at Aussie dollar's bullish, looking bullish to me. So if I look at this right now, I mean this is still in the range. If it breaks out of the range, obviously quarterly basis, it's going to push a lot higher. But while it's within a range, you can still take advantage of that. So I'm going to see, okay, within here, where's market being capped by? The market's being capped by this monthly low here, and it's being capped by this monthly high here. So all I need to know is playing within this. Okay, so I said to like one of my main setups was for a short towards the low. So while it's range bound, we play it from one side of the range to the other side of the range. So within that, I'll take out the midpoint of the range, and as soon as I got the midpoint of the range, we can see that if it breaks the midpoint, it's going to most likely go towards the downside. Now, what objectives do I have? This consolidation here, and then stops resting below here. So instead of I played Euro through the Euro Aussie. So that sort of makes me feel more confident about the idea. And last week we had this is like last week's high. We took out Monday's high. So if that's the case and broke down, because at this point, beginning of the week, we didn't break the mid-range and I had a bearish Euro bias, I played a smaller position because I know if it breaks that, then most likely it's going to push the range high. And then as soon as it broke the mid-range, we've had multiple attempts at it. Aussie's still pushing up. Euro's still consolidating. They played this and we're in a bearish trade right at the moment. I'm looking for this level here. If it's to break this mid-range and not reject, I'll cut the position. So I shift towards crosses. Now, this brings me back to I'm bullish dollar yen and weak yen, but I don't want to play the dollar yen. What do I play? The New Zealand yen. And reason why is because if you look across the board to all the yen crosses, CAD yen's been pushing up.
Yeah.
Aussie yen's been pushing up. The one that's lagging is New Zealand yen. So usually
So the Kiwi weakness compared to Aussie. Aussie
Yeah.
stronger than Kiwi.
Yep, that's it. So I like to look at the crosses. For example, in this case, Aussie New Zealand's been firing up, okay?
Yeah.
Eventually, this is going to have some sort of pullback, okay? Or some sort of pause. All I need is that pause. The moment it pauses, so it's taking out these keys highs. So usually, the crosses will, if some, like for example, Aussie yen, CAD yen, all the yen pairs are rallying, the lagging one will play catch up eventually. Now, we had a bullish bias on the New Zealand yen from down here. So if we look at this right now, what range are we stuck within? So that weekly high, that weekly low, one attempt failed, second attempt failed, third attempt failed, which proved that was the range low. Here we attempted it, we broke, we failed. Then we had a weekly close above. Last week we retested it. So as long as it's above this level, I'm bullish. So if we look across the board, it was weakening, weakening, weakening just to touch that range high here from the weekly. Did they move? So I'm long, and I've got my stop loss here. I believe this is the one of the pairs that you should play catch up, and I'm looking for it to play towards the higher time frame level of this low here, 70.20.
Do you look at the Aussie Kiwi pairing for trade selection between the two?
Yeah, I do. I
And-
always look at the crosses. Yeah.
Okay, so if you're looking at that, perhaps Aussie Kiwi is might peak a little bit up here for Kiwi to take the leadership role.
Exactly. So it's funny how as soon as this came to resistance area, that's
Yeah.
when New Zealand yen, and if you look at it, New Zealand dollar as well. It came
Do
into
I-
there. It's making
Do
a
I
higher
read
lows.
your mind a little bit or what?
Yeah, I think some crystal bullshit going on here.
All right, so that's a real interesting point and great mentoring when you're unclear on the dollar to move towards non-dollar pair trading, and I think that's one of the highlights of it. How about energy here?
Which one?
Oil?
Oil, yeah. I mean, I've got a plan for oil. I mean, let's go back. Oil, I am bullish macro view, but let's see if it proves my idea. So if I go to oil, okay. So oil, if you look on the quarterly chart, I believe this is bullish. I'm seeing this as a higher low. Unless these lows break, I'm seeing this as a higher low. So my objective for oil is short term is going to be here. this high here.
Where's that? 60?
This comes in
15?
around yeah, 60.71 ish. Yeah,
Okay.
about 60. Call it 60. So let's break this down to the lower time frame now. So oil on the lower time frame, I'm using a macro, my bigger time ranges. No, that's the wrong one here.
I think we're testing some major support on this pullback here that we broke out of last
Yeah.
week.
So to break it down, I mean, I'm using this range low to this range high, and this is the midpoint. So we can see how pivotal that midpoint is. So normally, when I have my ranges, my midpoint is usually my magnet for price. If it's gives me the bullish price action, it comes to this point support, and it bounces, give me the bullish price action. That's usually the magnet for price. I don't care about higher prices. This is the magnet. If it makes a clean break, I'm bullish. Now I wait for the lower time frame. So last week we took a long around here, and we got out around here. So this is my key SR level. So we formed a range, okay, and just call it that. Consolidation. We will look for the break retest now. Now I don't blindly buy it. I need to see, okay, is the market going to confirm? So what I do is I break it down into further ranges. So my setup is it comes into here, unless it's really clear. I'm not going to take a long here. Oops, sorry, that's my recording from the live session. So if it comes down to here and it gets back above, then I'll be looking for the longs above here because
Where's that blue line? 540?
That line is here, the SR level here.
Okay,
Yeah, so it's
close
55,
enough.
55 40s. So if it comes down to here, I'm not interested along here, but as soon as it consolidates, gets back above it, there, that's the pull, that's the deviation of the range. So,
Okay.
so this was one of my exit techniques as well, where it came down, got back above, and then here I exited the remainder, which means it's capped within here. If it breaks that, it's gonna go lower towards probably around here. If it gets back above here, that then supports my higher time frame bias, and at that point I'll start looking for longs. So start, and then here's my first attempt at longs. And then if it breaks this, then that means we're going to continue higher because it's come off that key higher time frame support towards my magnet,
Right.
which is around 58, 60s on a smaller time frame, but we've got the 60s higher time frame.
58, 60, 61 back, 18 back from that spike on the attack on the Saudi oil fields from there.
That was a dirty one. But if it breaks this, if it breaks this low, then that most likely that means we're going to probably head towards this range low. Then my bullish bias gets cut off. And I'll change.
All right. So with your work, when markets are at new historical highs or new historical lows, and you know, you brought it up, a lot of people trying to top pick the S&Ps. What do you do to possibly get a handle on how much higher a market could go when it's breaking out into new high ground?
See, in my opinion, right, I think there's a lot of emotion involved when you go, oh, it's at no high, it must come down. Why has to come? Why does it have to come down? I mean, let's look at. I mean, this is what I do to clear my mind. Right, I'll just go to a macro chart and say, okay, what is the quarter to me? There's nothing bearish about this.
Nothing.
Okay, I mean, it's quarterly. I mean, look how bullish this is. Okay, I won't fight it. I'll go along with it until I'm wrong. Then I break it down. So I've been using this range. I think it was in the past couple of ones as well for ages. So I mean, I've got longs going on. So here it's at all time. I had to approach this. So the way I approach it, I look back. I work backwards. Say, okay, where am I wrong on the idea? Well, I'm wrong here, this low here. Because if it takes out this low, most likely it's gonna have a deeper pullback. But
29.80.
But that does not mean I have a trade idea. So what do I need to see to have a new validation level? Could it come into these highs here? Could it take out this low? That's fine. I don't care. What I do is I look for to come below all-time high, which is here. And then as soon as it gets back above, that's it. From my validation level goes from there to there. So as soon as I've got a tighten validation level that fits my risk parameters, then I'll be interested because I know where I'm wrong. As long as I know where I'm wrong, I can work with that. Instead of guessing here or there or there, I look to tell the market, tell me, okay, the new validation level. So if this was to happen, get back above, I believe that would be the new validation level. So we got FOMC tomorrow as well, so probably market won't do much ahead of that. But yeah, so I will be using that, and this is a SR level. We've attempted multiple times. I mean, looking across the board, all the indices are pushing up. So I think personally, so if I'm using that, what I do is one way of projecting, if it's at all-time highs, how you can predict with fib extensions. Okay.
Yeah.
So 3094, I believe is next. Then that. The other way is, okay, if it's moving in these ranges, I'll just copy that range across and say, okay, equal measure moves, which lines up around there. So I reckon halfway point and then there. So
yeah, great technique. Okay, so we covered a lot of asset classes here. I don't want you to break a promise to all your followers, and
Yes.
everyone wants, you know what everyone wants to see, right? Buddy?
Yeah,
There it is.
yes,
All right.
Bitcoin.
Okay.
All right, let's break this down because this is some. I think people are so emotionally attached to this, right? A lot of people seem to think I'm a perma bear. I'm no perma bear. I was bullish, on the ride up. I'm bearish on the ride down. But okay, let's break it down logically, and then people can make their own mind up. So if we look at it right now, I always like to start with a higher time frame chart. What are the quarterly levels saying to me? So I'm going to start this off with, okay, that's a key level there.
Yeah.
I mean, with Bitcoin, there's not much price to work with. It's still like a immature market in that sense. And then this is my key level here. Okay, there.
Okay.
So, okay, when we broke below here, I would look for bearishness and we rolled it down. And then below here, I was a bear again, but now it's stuck between these two levels. That's not enough to go by. What I can say is a clean break below here, then we're bearish. A clean break above here, we're bullish. Okay, let's break it down further now to the monthly. Monthly, I mean, the monthly candle hasn't closed. If Bitcoin can do a 40% move in one day, it can do a 40% down move in a day as well. So let's keep it realistic and say, okay, that's fine. I mean, this was my initial target there. It's taken that, and I had to close the rest. So I'm not getting much from that. Let's break it down further and say, okay, this is where my range is coming. So on the daily, I can see it's consolidation, breakdown, retest so far. So what I do is, at which point would I feel comfortable going like major bullish? So I mark out my ranges. So this is the low. That's the
Right.
that's the high. So if it smashes above here, that would confirm to me or increase the probability that the high is in. For now, resistance has become support. And look at this, it can't make a clean smash above that quarterly level. So could I take a trade off there? Possibly, but I need more confirmation. The other ranges is here and then here. So there's two ways of playing it. While I'm here, it's sort of like, for me, it's short term while I'm stuck between here. If it was to make a clean break below here, then I believe we go to around the 6K levels. Okay.
Yeah.
So what I'll do it for a clean break above here, then I'll high probability longs. Now I can still play day trades towards that. So what I do then is I break it down further and I'll get rid of this and say, okay, what's going on? So I'm going to go to this chart now. Now this chart, what I've got marked out is
So you'll drill down all the way to 5-minute chart to trade this intraday.
Yep. So what I've got here is this is
3-minute now.
This is the 3 month, that is.
Oh,
This is
3
the
months.
low of
Okay.
this is the low of the year. That's the high of the year. This is the
Yeah.
midpoint for the year.
Right.
So probability wise, if you were to ask me where would I get strong probability shorts, clean break below the midpoint. So what I then do is, okay, if I've still got that bearish bias, I'm seeing this as a deviation. Now a lot of people say, oh, look at this impulsive move. Well, whenever we see that in FX, this usually is a sign that, hang on a minute, that's like a topping out. Now everybody chasing it. When do you see this not get filled in? So
Yeah, true.
So what I'm seeing is, okay, within that, what do I need to see? Short term, I've got a short on. My stop loss is around here. If it makes a clean break above here, I'm wrong and I'll cut my short.
Okay.
And
So you think it could pull back to your I don't know if it's a green or black line around 8,600. That's a midpoint line or a quarterly line.
Yeah, that's the midpoint for the year. That's the
okay.
midpoint for the year. Now, if it makes a clean break, now there's two things that could happen. Now, one scenario is everybody's looking for a retest there. That's fine. I'm only looking to trade it short term there. My swing trades come in play on a clean break below this red level here. So for a bullish case, if it does this and it gets back above it, I'm happy to take a long back into there. Now, this was resistance.
Right.
So if it gets back below here, that means all this move was a deviation. Then my swing shorts come back in play. And then that's when I don't care if I don't catch the high, but I want to get in when the probability is high. For me, the probability side, if it gets back below the mid range, that's 0.1. 0.2 is the SR around that. Look at this.
8250. A lot of moving averages coming in there too on the daily. So
if you look if you look historically, this level here, every time it deviates, it got back below it, pushed lower. Deviates it, as soon as it broke below, it pushed lower. Same thing again. If it deviates it, breaks down here, then down, takes at this low, we should go to 6K. So I'm happy to play either way. Let the market show me.
So another great record time presentation by Trader One SC.
Yep.
Really, anything you want to wrap it with?
No, not really. I mean, just
okay. Well, you know what? Thanks for coming today, my trading warrior brother. some
Oh, yeah.
great looks.
I think
Great
had
looks. Really cautionary tale for the bears and S&Ps, and yen. If it does what you say it's going to do, you know what everyone's wanting to short, the stocks S&Ps are the wrong short, because if you're right about the yen, the crash comes in the bond market, not in the stock market, at least initially. So I really love your work, Saeed, and
thank you very much. I
appreciate
appreciate that.
you know, coming in here. Much respect, my training warrior brother.
Thank you very much, Dave. Have a good one.
All right, you too, buddy. So everyone, thanks Saeed Zaman, and you can follow him on Twitter, and he has a following. There's a reason people have followings. It's because they provide good content. That's why we have one. That's why Saeed has one. So you know that people are adding value to their followers by the kind of looks that Saeed gave us today. So that's a wrap, everyone. Nick, have a good afternoon. Brock, Forex Gal, likes a sweet triangle. Maybe you need to go have a date, Forex Gal. I don't want you falling in love with technical formations. Find yourself a man with a 7-figure trading account. That's my that's my advice to you. All right, everyone. See you, Monica. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios.